How I make $5,000 a month using the wheel strategy on just 2 stocks by Money Talk with Rashad. A few people have asked me to review some of his videos, so let's check it out.
What's up, traders? So today I'm going to show you 2 different stocks that I pretty much always have trades on. And these 2 stocks collectively help me bring in, at minimum, $5,000 every single month. Now, if you're new to the channel, my name is Rashad.
In general, it's my opinion that virtually everyone who recommends running the wheel or selling cover calls is going to underperform the market. And you can easily find this out yourself. Just go into AI or Gemini. In fact, you can see here that the annual underperformance for a cover call strategy is about 6% a year. And it's a lot more work than simply buying and holding. But let's see what Rashad has to say.
I am a full-time options trader, and I bring in multiple 6 figures a year from the stock market, and I use the money I make from the stock market in order to pay for my entire lifestyle.
My gut feeling is that the majority of his money comes from selling programs and not actually from trading. But I can be wrong. That's just my opinion.
Initial reaction when seeing this post was
Rashad, another fantastic week with cash secured puts and covered calls. Collective premiums in TQQ, UPRO. Those are both leveraged ETFs, which are very, very risky. HIMS, Hood, Tesla, TSLL, which I also believe is a leverage ETF. Palantir, BitX, MSTX, NVDL. Thanks, Rashad. Truly a blessing. So I know Invest with Corey likes to post these screenshots. And I also believe that Invest with Corey is a compulsive liar. So I definitely don't put much credibility in these screenshots. However, during a bull market, sure, selling puts and running the wheel can be profitable. The problem is that during a bear market, I've seen people who run the wheel end up blowing up their accounts.
First, extreme happiness, and I'm just thankful that God has used me in order to help bless others.
Oh, so here's another person who's invoking God in order to try to separate you from your money. I've seen this type of thing happen with someone like Terry Igioma. They try to use religion as a way of gaining your trust and separating you from your money. Someone like Felix Pren from Goat Academy, he has a tendency to use animals to gain your trust, but using religion is also very popular.
But then I started to think back to when I was an employee, because my last time being an employee was in 2017. So I believe I was 28 years old. And just being honest, the most I ever made as an employee was $18 per hour.
Hey, look, there's nothing wrong with working hard and making an honest living. If you're making $18 an hour, there's nothing wrong with that. There's no shame in working hard and earning an honest living.
All right, and now I know that was back in 2017 and some things have changed, so maybe I'd be making a little bit more now. I'm off the cash that they already have, then tell them about it. The link is below in the description, but not only will they get my exact, send them the link. BC stock is currently 100.
So here's the wheel strategy. You would sell a put option, then you would collect credit. If the option expired worthless, then you would simply restart the wheel and resell the option and collect credit. If the underlying fell below the strike price, and you would get assigned, and then you would sell some covered calls. You would then wait for the shares to get called away, and then you would restart the wheel. I think that this strategy, and all the research indicates it as well, is pretty bad because basically you're giving up all your upside potential by selling that call option. And furthermore, you're not capturing any of the upside potential because when you sell that initial put option, your maximum profit is going to be the premium that you collected. So in general, selling the wheel is a great way to underperform. And then it's further compounded during a bear market because when the market crashes, the amount of premium that you're going to collect when you sell those call options is going to be virtually nothing relative to the amount of money that you're going to lose when the market is crashing. You're basically going to be collecting pennies, but you're going to be losing dollars. And if the market falls by 30% and you sell some call options that are only slightly out of the money, you might actually be forced to lock in your losses and have the shares be called away below your cost basis.
If you do that, then it's the selling put portion.
All right, let's see. We already know what the wheel strategy is. So let's fast forward through this video.
Pro leverage ETF for the NASDAQ 100. And so this stock moves very similar to ticker symbol QQQ.
TQQQ. It's okay. I do like the fact that it's a leverage ETF on an index. I don't like the fact that it's a leverage ETF. I would not trade this long term because it has a propensity to shed value. However, if you are going to trade a leverage ETF, then trading something like TQQQ or UPRO which is a leverage ETF on an index, would be the best way to do it. Also, I personally would definitely invest in these leverage ETFs during times of high volatility when there's a lot of fear. So during a VIX spike, when VIX is trading over 50, then investing in TQQQ would definitely be worthwhile. But to use it as an everyday trading vehicle, and I think he said earlier in the video that he has a tendency to always have trades on the underlying that he's showing in this video, I think that that's a huge mistake because these leverage ETFs decay over time.
However, because it is triple leverage, that means it moves the first reason is the stock price, or the premiums will be. And so because TQQQ moves about 3 times more in general, all right?
One thing, if you're using margin, then I would definitely recommend checking with your brokerage because they oftentimes have different margin requirements on leveraged ETFs.
And if we look at some of the data down here, was UPRO, ticker symbol UERO. This is pretty much the same as TQQQ. However, it's a leveraged ETF that follows the S&P 500.
Yeah, my same comments apply for UPRO than they do TQQQ. I think that there's a time and a place for these leveraged trading vehicles, but to always have trades in them is not something that I would do.
It looks to move about 3 as much as TQQQ. And the maximum expected move from now until then is a $9 move, which will be about a 10.64% move. Now, on the lower price, that will put us around $76. That is the price that we want to pay attention to. All right, so we have our price for UPRO, but now let's take a look at TQQQ. Then same thing, we'll do the exact same expiration date. We can see the price is currently $76. The expected move is around $8.09, which is about 10.64% as well. And then on the lower end, it has us at $67.97. And so just to make things easier, we'll say that is $68. But now that we have our 2 price points for our 2 different stocks, let's go ahead and head over to Thinkorswim and look at a potential trade. All right, so now we are in Thinkorswim and I have TQQQ's options chain pulled up. So the first thing we need to do is go to the exact same expiration date that we're looking at, which was the 32 days out from now. Now we're over here on the put side, which is always on the right. And we can see at the strike of $68, that will put us at a premium of about $2.10 to $2.13. And so with options, everything is times by 100. So we will receive anywhere between $210 to $213 per contract for selling these puts right here, right now. Now, if we take a look at the delta is this column here, but the delta just aims to show how much in options per TQQQ. I am fine with getting a little bit more aggressive. So we will go ahead and we will go with that $68 strike. And if we wanted to place this trade, all we need to do is come over here and select the bid price, and our brokerage will automatically load our ticket for us. So we can see it says sell, and then we need to select our amount of contracts. But how I like to do it is I like to kind of dollar cost 112 contracts will be worth on expiration date. Now we did 5 contracts and received $212 for each. And so that is $1,060 that we receive right here, right now for putting on this trade. If the stock price goes up, then we just make that $1,060 that we received and we go about our day. If the stock price stays about the same, we just keep that $1,060.
That's a pretty aggressive trade considering that the current market price is $76, but I don't necessarily hate it. I think a lot of it depends upon how large his account size is. Using 5 contracts is pretty aggressive. I've definitely seen worse trades. Selling a 32 days to expiration for the July 18th with a strike price of 68 and collecting $2.12 when the current market price is at $76. It's not horrible. I would probably give it about a B- or maybe a C+, but I've definitely seen a lot worse trades.
Stock price goes down, we just keep that $1,060. However, if the stock price were to drop below our $68 strike, then we start to make less and less money, as you can see here. And then if the stock price were to drop even further, then this would start to become take my losses for that trade. Now let's go ahead and talk about the covered call side of it. So let's head on back to the options. All right, so in this situation, since TQQQ is currently $75, we usually go ahead and select the bid price, and it loads our ticket for us. And then we can go ahead and select the amount of contracts again. So let's assume we had 5 just like before. And right now the mid price is $280. So I'll go ahead and select that. And 280 times 5 would be $1,400 that we will receive right here, right now, if we were putting on this trade.
The way that the wheel works is that you wait to get a sign and then you would sell some call options. So for him to say when the underlying is trading is 75 that you're going to sell the 80 and that you're going to collect $1,400 is misleading at best. considering that the underlying would have to fall to about $68 in order for you to get assigned. Therefore, it would be about $12 out of the money, whereas he's showing you the amount of premium that you would collect when it's only about $4 to $5 out of the money. So in my opinion, this is misleading. Plus, as we've already established, selling covered calls is a great way to underperform the market. If you're assigned shares, the best thing you can probably do is just simply to hold on to the shares so that you could participate in the upside potential.
Remember, a covered call is just you agreeing to sell your shares below $80. Do we keep that premium we were paid? And we
Right, so it's not the worst video. I do think it was a little bit misleading that he showed the call premium. I'm definitely not a fan of selling covered calls, and I think that the wheel strategy is going to dramatically underperform. But if you have any questions, leave a comment below and let me know your thoughts on Money Talk with Rashad.